understand how market actually moves. Market moves in three simple ways, right? The first way the market moves is it will move in an uptrend, right? So now you can ask, okay, well, it's easy to say uptrend. What's an uptrend? Uptrend is when price continues to go up, obviously, right? That's an uptrend. But what happens in an uptrend? Now, I hope people take notes. Let me turn off the music here. I hope people take notes because taking notes is going to be really, really, really important, right? So number one is uptrend, right? Price goes up. Now, market only moves up, down, or it ranges, right? So when you have an uptrend, you need to understand that when price is moving in an uptrend, it's making a series of higher highs and higher lows. So first of all, we're going to define trends, and then we're going to define how candles move in those trends, and then we're going to define support resistance, and after that, we're going to define how to take entries based on these three facts, right? So first, we have price moving up. When price moves up, it creates a high, it comes down, and then it's going to create a support, and it's going to create another high, right? So what do we have here? So this is basically a higher high right here, and then you have a higher low, right? If there's still momentum in the market, price will continue going up, and it will make another higher high right over here. We have another higher high, and price will continue to come down, and it will create a higher low. It will create a support, and then it will continue up to create another higher high. This is the basics of uptrend. Right? I hope everyone knew this one. This is very simple, easy. Price in an uptrend creates a higher high, comes down, creates a support, creates another higher high. So now someone might ask that, okay, well, how do we know, right? How do we know that price will continue to go up, right? That's the probability that we're counting on, because the fact of the matter is whenever price is going to make a high right over here, there's a 70 to 80% chance that high will get retested again. It happens all the time. So in an uptrend, price makes a high, comes down, creates a support, and makes another high. So this is what they say, that you should always trade the trend, because the probability of price to continue in a trend is higher as long as it respects the previous low, right? So if you see price broke up, here, made a high, came down to create a support at the last resistance, right? So that was your uptrend. Price makes higher highs and higher lows. Perfect. This is very basics. We're going to go in a lot more detail. Now, what's next? Next, we have price moves in a downtrend, right? What's a downtrend? Downtrend is when price is moving bearish, and price always moves bearish from resistance. Perfect, right? So price moves down from bearish, it makes a low. Whenever price makes a low, it will always have a pullback, right? Because you need to understand, whenever price is heading down, that's a good thing. Because most times what happens is when you wake up and you look at the chart and price is dropping, you're like, oh man, I missed this move. But you should always look at it from the fact that, okay, if price is dropping, it's probably making a low. Whenever price makes a low, you should know it will always pull back. It will create what? It will create a resistance, and then it will retest that low, right? So it will retest that low, and that retesting of the low, that's like on the high time frame, that's also a wick fill. So we're going to go over that in more detail too. But like when price is in a downtrend, it's going to make a low, it's going to pull up, create a resistance, then it's going to continue down to retest that low. If there's still momentum in the market, it will continue falling down. It will come up, make a lower high, and then it will continue down to make a lower low. So what do we have here? We have a lower low. We have another lower low. We have a lower high over here. And we have another lower high over here. And then eventually, price makes another lower low. So this is the basics of a downtrend. Price comes down, makes a low, comes up, makes a high, goes back down, makes another lower low. And then comes up, makes a lower high, makes another lower low, right? This is the very, very basics of a downtrend. So we talked about uptrend, and we talked about downtrend. Very simple. We're not going in any detail. What I'm explaining here is what we see, right? Perfect. So we have uptrends, and then we have downtrends. Now what's next? The third one is consolidation, right? So price will move in an uptrend, downtrend, and then it will consolidate. So what does a normal consolidation look like? A normal consolidation is going to look something like, I see some people asking questions. Just understand that I'm going to ignore all your questions because all the questions are answered here without you even asking. Yeah, that's about it. Yeah. So price moves in consolidation like this, right? This is the worst time to trade when price is moving in consolidation. This is the worst time to trade when price is moving in consolidation. Because when price is moving in, okay, think about this, right? Think about this. Let's say we have a resistance and then we have a support, right? And let's say if this range is around 25 pips, right? And price is moving within this range, like this or like this, like this, like this, price moving within this range. So now if someone gets a bright idea that they want to take Jeevan is messaging me here. Hey, Jeevan, if you want to come on, I think by like 10, 10:15 is going to be good. Okay. So when price is moving in this range, what you're trying to do is you're trying to see that, okay, if you take a buy over here, what's the probability that price can go up or it will go down? There's a 50-50 chance, because this is a small range. This is a 25 pip range. It's not big enough, right? So there's a 50-50 chance price might go down or price might go up, but the things you're going to see in this chart, the candles, the way the candles are forming, all other confluences, your buddy is going to tell you something and you're going to say, no, you know what? I am a new stubborn trader and I think price is going to go up. When in reality, price is just ranging and there's a 50-50 chance it can either go up or it can go down. So the best place to look for a trade is going to be when price reaches support or when price reaches resistance, right? Where do uptrends start? Uptrends start from supports, right? Downtrends start from what? What? Huh? Resistance. Downtrends start from resistance, right? So when price reaches resistance, you're looking for maybe a candle to flip in your direction. Oh, actually, we're going to talk about that in the later slides here now. Okay, let's keep moving on. Sometimes I get ahead of myself, so I gotta keep myself in check. Raja actually made these slides, and I'm Rakil here. I'm trying to explain them, and then Raja's going to come back later to do some simulation. All right. What's this? Oh, how can we identify that in candles? Okay, good question. Someone might ask that, okay, if price is in uptrend and price is in a downtrend, how do we identify that in candles? Like if we only see candles, how can that be identified in candles? Very, very simple. So let's take a look at that. Look for the higher time frame candle, right? So let's say that we have price that is moving bullish right here, right? We have price that is moving bullish on the daily time frame. Now, you have to understand this one concept. On the high time frames, the trends are going to be stronger. If you have a bullish candle at support and it's a decent size bullish candle at support, let's say on the daily or the 4-hour, there's a very high chance that the next candle is going to continue moving bullish, at least filling the wick. So this is what they call the wick fill. That will continue bullish, at least filling the wick, right? So that's how it's going to happen. So now when you translate those, like remember those lines we drew on the uptrend and the downtrend? So when we translate on the candles, this is what it kind of looks like, right? So in an uptrend, candles are going to form like this. You have a bullish candle. Let's say, hypothetically speaking, that we have support here, right? You have support here. This candle closes bullish on, let's say, the 1-hour time frame, right? So now you have to ask yourself that, okay, what's the probability of the next candle to continue bullish, right? You always have to ask yourself, what's the probability for the next candle to continue bullish? Is it Is it 10%? Is it 80%? Or is it 70%? So that's the idea you're going in with, right? So now, if this candle had closed bullish, there's a higher chance for the next candle to continue bullish because one, we're at support, and number two, we have a bullish candle close. If you're looking for buys at support, you're not looking for buys when candles are bearish because candles are not in your direction. You have to wait for the candle to close in your direction. So when you have a bullish candle closing, now you look around and say, okay, you know what? Perfect. I have a candle that closed in my direction. Now this means there's a higher chance for the next candle to continue bullish, right? So now someone can turn around and say, oh yeah, man, but if you're too smart, if you look on the high time frame, we still have a big bearish candle. That's correct. So on the daily time frame, let's say you have a bearish candle, but on the 30-minute and the 1 hour, you see some valid support being formed. That might give you some indication that, okay, the lower time frames ultimately make up the high time frame. So this might be a start of a lower time frame uptrend. Because when the lower time frames start uptrends, that will automatically translate into the higher time frame uptrends. This makes sense? Because on the lower time frames, price has to change direction before the higher time frame changes direction. You've seen us do this all the time in the live streams. Whenever candle closes bullish, someone says, oh, but the daily is bearish. That's correct. But on the lower time frame, we are seeing these signs. It's all probabilities. If you look at the 15-minute, the 15-minute has a very, very less probability, right? Because 15-minute is a small time frame. It has very weak confirmations. But when you look at the 30-minute time frame, the 30-minute have really, really strong confirmations, right? So that's why most times I'm trading based on a 30-minute or based on the 1-hour candle closes, especially in my direction, right? So let's keep moving here. So this was the basics of how you can, identify that in candles. So now the next candle, let's say hypothetically speaking, the next candle also goes bullish. So what do we have here? We have a uptrend, right? Price made a low, price made a high. And then what happened? Price made a higher low and price made a higher high. And then candles made another higher low, and then the candles made another higher high, right? So this is the basics of an uptrend. So when you're looking for trades, realistically speaking, man, in trading, what you're doing is you're just anticipating the next candle. That's it. That's all what you're doing. You're just anticipating where the next candle is going to go. People have been talking about Sean Lear. Let me just disable this YouTube chat here. 1 second. All right. Okay, so you're anticipating candles. You're anticipating where the next candle is going to go, because if you can literally visualize the next candle, that's your trade. That's it. That's your trade. Let it be your 1-hour candle, the 4-hour candle. But if you can accurately say that, okay, since we had the 1-hour candle closing bullish down here, there's a high chance for the next 1-hour candle to continue bullish, right? So now think about this for a sec. If you're looking at something like GJ, right? On GPJPY, the 1-hour candle is going to be around, like, let's say 15 to 20 pips, right? And if you can visualize the next candle, man, that's going to be your trade. 20 pips, 15 pips, that's going to be your candle trade. So when candles are making these higher highs and higher lows, this is what you're putting your trust in. You're putting your trust in the fact that, okay, if this uptrend is going to continue, the candles should not break the lows of the previous candles. Make sense? So this is the very, very basic. So remember we did the, price comes up, makes a high, then makes a higher low, makes a higher high, makes a higher low, makes a higher high. So this is the same, right? So we had this uptrend in lines, and then we have uptrend in candles. You have to really understand this fact, right? How candles are moving up, how candles are respecting higher highs and higher lows. This is an uptrend, right? So we're going to go over much more detail here. Let's go over to the next point. I don't even know what the next point is. Raja did these last night, and he just said, hey, Rakil, when you wake up, just do this webinar. I'm like, okay, sir, we'll do this webinar. Okay, if the high time frame candle is bullish, then there's a high chance small time frames are in an uptrend. At this point, we look for higher highs and higher lows. Make sense? Right? So let's look at this one example here. Someone said no sound. I guess you got to turn on your speakers, buddy. Okay, perfect. So we have this bearish candle right here, right? We have a bearish candle right over here. So now let's imagine that this is a daily bearish candle, right? Let's imagine this is a daily bearish candle, which is bearish. It left a wick at the bottom. It left a wick at the top. Now I'm pretty sure everyone understands candles and you already know that this is the high and this is the low right over here. And if this is the daily candle, how would the 4-hour or the 1-hour candles look like if this is the daily candle, right? If this is the daily candle, maybe, let's say the 4-hour candles are probably going to look something like this, coming down like this. And then eventually, they try to close bullish like this. Does this make sense? So now this is, for you to understand this is very, very, very important, right? So check this out. This is the high of the daily candle. This is the high right over here, right? This is the low of the daily candle, and this is the low on the 4-hour time frame. Let's visualize that. Hypothetically speaking, let's say this is the 4-hour time frame, and the daily candle has 4-hour candle. I know it doesn't make sense, but for simplicity, it does make perfect sense, right? So this is the low right over here, and look where the daily candle closed. Look at that close. So this is the close right over here. When the 4-hour candle went bullish, it left a wick on the daily candle, and that's where we have the close, right? So on a 4-hour, it might seem like we are heading up, right? Because we have this bullish candle forming right over here. It might seem like we are heading up, right? So what can happen is now maybe the next candle is going to do something like this. Wait a minute. The next candle can maybe do something like this in a downtrend, right? So what's going on over here? Now price has created a low. What are the chances that this low is going to get retested again? There's a very high chance, right? There's a very high chance that low is going to get retested. But if that low is going to get retested and someone wants to take a sell over here, you need to wait for price to close in your direction first. So let's say the next daily candle starts, and the next daily candle, it kind of like the 4-hour candle wicks up like that and forms kind of like that. So when this candle forms, this is basically something like this, and that's the top wick of the daily candle. Does this make sense so far? Right? This is the top wick of the daily candle. So now, once you have a candle closing bearish, right? Once you have a candle closing bearish, and now you're anticipating price to go down, what are you saying? When price goes down, what happens? What happens when price goes down? What do candles make? Candles make lower highs and lower lows. That's what candles do. They make lower highs and lower lows. So if you're expecting the next candle to continue bearish, you're not expecting that candle to break the high of this current candle. Because if it respects that high, only then it's going to have a lower high. You need to understand that, right? Only then it's going to have a lower high. So maybe it's going to form something like this. And now we have a lower high. This is a lower high right over here. So now where's the stop loss is going to be? Stop is going to be above the previous candle. That's the condition. And we're going to go over in a lot more detail on stop losses too, but I'm just trying to explain what it means when we talk about wick fill. So now when you have this bearish candle forming, that translates into the daily candle now going bearish. So when this candle is going bearish and you have the low right here on the left-hand side, this low is going to get, someone can turn around and say, oh, yeah, we're going to fill the wick. But when you look at the candles, you're like, okay, we're moving bearish. If candles are moving bearish, they're making lower highs and lower lows. So what's the probability of the next candle to continue bearish? What's the probability? Right? That's a very high probability for the next candle to go bearish. So what are you going to do? You're going to be like, okay, well, the next candle looks like it can go bearish, so I'm probably going to hold my sell. Right? And if you're holding your sells, what's going on? So if your stop loss is up over here, actually we're going to talk about stop losses later. I keep jumping ahead. Okay, so now that's going to bring your daily candle down to this wick fill. You're going to be like, oh yeah, look, I got this wick fill, and maybe it goes further more. So that's how you look at the candles. You wait for the candles to flip in your direction. Now, I'm sure a lot of you have questions right now, but you'll have to watch this part maybe 4 or 5 times to actually understand. All right, let's go to the next point over here. Gotta remove all this. Da 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 da. I even stopped the music. Music was distracting me. I don't know how Raja does this. Okay, if the high time frame is bearish, then there's a high chance small time frames are in a downtrend. At this point, we look for lower highs and lower lows, right? So it's the same concept. So we first talked about bearish, and then when we talk about the bullish one, it's the same concept. You have a bullish candle on the daily, right? And then the next daily candle, you expect it to fill the wick, and maybe this is your trade. Maybe this is your trade based off the high time frame, right? On the smaller time frame, it's going to look the same as it looked like on the bearish trend we saw. The price moves up, price is moving up, price is moving up. When price hits a spot like here, you're like, oh man, I missed the trade. I missed this trade, right? So when you miss this trade, what you got to do is that you have to wait, because if price is moving up, price is creating a high, man. When price creates a high, it will make a pullback. And then what's the probability that if it creates a support in an uptrend, price will retest that high? That's a very high probability. So what's going to happen is maybe the next time you can see, okay, the candles are trying to come down and someone says, oh, we're moving bearish, but ultimately we're not moving bearish, because when a candle forms bullish over here, you turn around and say, okay, perfect. What was going on was that this candle closed bullish. We are in an uptrend. Price is forming support, because now if you're looking for buys, this candle has closed in your direction. It's very important. When the candle closed in your direction, you're like, okay, perfect. I can take a buy. But you cannot take buys when candles are bearish. I mean, you can if you're aggressive, but it's still very risky. But the rule of thumb is you have to wait for candles to close in your direction. That's what my mentor, Teddy mentored me. That's what I learned. Like, you have to wait for candles to flip in your direction first. Just like going on a bus, you stand at a bus stand and a bus is going left. You're like, okay, perfect. Bus is going left, but I want to go right. So if the bus comes, it goes left, I'm going to hop on that bus. Makes no sense. You can't hop on a bus that goes left because you got to go right. Just makes no sense. So you have to wait until the bus goes right. You're like, okay, perfect. Now I'm going to get on that bus. So it's the same thing here. When the candles are bearish, you can't take a buy, because what if the next candle just falls and this big daily candle just goes bearish like this? Then what? Now you're fucked. So you have to, if you're looking for buys, you have to wait for a candle to close bullish like this. And then what's going to happen? If it's an uptrend, this is what's going to happen. It's going to make a higher high and a higher low. That's what the candles are going to do. So the next candle is going to probably make a higher low and a higher high. Because if you're looking at the 30-minute time frame, there's a high chance for the next 30-minute candle to go bullish as well. And when you look at the 1 hour, there's an even higher chance. When you look at the 4 hour, there's an even greater chance. If you look at the daily, there's a massively greater chance. But if you look at the weekly, oh man, forget about it. Weekly is going to take you to the promised land, but it's a long way to hold. But when you're looking at the 15-minute, that 15-minute is a very weak time frame. You're going to get a lot of fake outs. You're going to get a lot of misinformation on the 15-minute time frame. I mean, you can, but it takes a lot of practice. It takes a lot of practice. It takes a lot of, experience to do that, right? So let's go to the next point here. But, oh, wow, look at this. But how do we know high time frame is in an uptrend or a downtrend, right? Even though someone can say, oh yeah, high time frame is an uptrend, but how do we know, right? How do we know that? So we need to be patient.